The Hang Seng has a sharp story in June. Property developers are up, a tools maker surged 20%, and a Chinese sportswear brand signed Steph Curry. Behind that, Chinese internet names are deep in the red. Old economy and new economy moved in opposite directions. Hello everyone, and welcome back to the channel. We are continuing our global market series with the top 10 Hang Seng stocks for June 2026. For clarity, figures in this video are rounded. The currency will be specified where relevant. Let us count them down. Kicking off at number 10 is BOC Hong Kong, up 9%. The bank declared an interim dividend of 29 Hong Kong cents per share for 2026, with first quarter profit up 7%. With Hong Kong property in recovery and mortgage rates easing, the city's banks stand to benefit from improving loan demand. BOC Hong Kong is a natural proxy for the broader Hong Kong economic recovery. Number 9 is Lenovo Group, up 10%. In late May, the company reported fiscal year 2026 results, with revenue of $83 billion, up 20% compared to last year, and net income rising 42%. Lenovo also laid out an artificial intelligence infrastructure pipeline valued at $21 billion. The post-results momentum carried into June. At number 8, Ning was also up 10%. On June 2nd, the company announced a 10-year strategic partnership with basketball star Steph Curry, valued at $400 million. The deal covers basketball performance gear, athleisure, golf apparel, and retail expansion across the United States and China. Investors read it as a direct challenge to Nike and Adidas in premium sportswear. Number 7 is Haidilao International, up 10%. Zhang Yong returned as chief executive in January 2026 and has been overseeing the Pomegranate Plan, a strategy focused on quality over rapid store expansion. The broader recovery in Hong Kong and mainland dining sentiment may have contributed to the move. Number 6 is ZTO Express, also up 10%. In May, the company reported first quarter results, 9.7 billion parcels handled, up 13% compared to last year, with revenue rising 22%. ZTO also announced a share buyback program valued at $1.5 billion. These results reinforced its position as the volume leader in China's parcel delivery market. At number 5 is Tingyi, the Hong Kong-listed parent of the Master Kong food and beverage brand, up 10%. The stock went ex-dividend on June 10th, with the trailing dividend yield sitting above 6%. The move appears to reflect dividend capture positioning. Number 4 is Henderson Land Development, up 14%. At the annual general meeting on June 2nd, shareholders approved a final dividend of 76 Hong Kong cents per share. The stock went ex-dividend on June 4th. Hong Kong mortgage rates have fallen to between 3 and 3.5%, and Henderson holds one of the largest private land banks in the city. At number 3, Sun Hung Kai Properties was up 16%. SHK holds the largest private land bank in Hong Kong. Falling mortgage costs and improving transaction volumes have triggered broker upgrades across the property sector. Property stocks as a group have outpaced the Hang Seng year to date, and Sun Hung Kai, as the largest name in the sector, attracted strong institutional interest. Number 2 is Orient Overseas International, up 17%. This is the parent company of the OOCL container shipping fleet. The strongest contemporaneous explanation was a sharp rise in container freight rates. By May 28th, the benchmark for Shanghai container routes had risen 18% in 1 month. That gave investors a direct way to position for stronger shipping prices, although freight rates can reverse quickly. And the number 1 Hang Seng performer for June is Techtronic Industries, up 20%. Techtronic makes Milwaukee Tool and RYOBI, 2 of the best-known power tool brands in the world. In March, the company reported record full-year 2025 sales of $15.3 billion, with the Milwaukee brand growing 8%. On June 1st, Techtronic announced an automatic share repurchase program worth $500 million. The fresh buyback added a direct source of demand for the shares alongside that operating strength. Before we go, let us note what did not work in June. Kuaishou Technology fell 22%, with analysts cutting their 2026 earnings forecasts for the company. It was not alone. Meituan, Alibaba, and Tencent all fell double digits in the same period. June split Hong Kong equities sharply. Old economy names recovered while the major internet platforms gave back recent gains. That is our top 10 for the Hang Seng in June 2026. Property developers and a power tools maker dominated the winners, while Chinese tech fell hard. If you found this useful, please subscribe and leave a comment below. And the question for June: is the rotation from Chinese tech into Hong Kong old economy sustainable, or is big tech about to bounce back? Let us know what you think. Thanks for watching, and see you in the next video.